Today's episode of Market Talk is brought to you by GrowMark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. Well, on Tuesday's trading session, we saw a pretty good day in the grains, recovering much of the losses we saw to start the week on Monday. A little more mixed activity in livestock, and the outside markets were fairly quiet, but still plenty to discuss here today. Let's bring in Bill Biedermann of agmarket.net. He is our guest analyst today. Pleased to have him back on the show. Bill, good to catch up with you again, sir. Hope you're doing well. Merry Christmas. Happy New Year to you.
Yeah, Merry Christmas to you. We're already trading Christmas holiday kind of volume, and I think a lot of folks are going to take next week off.
Yeah, I think you are exactly right, and I'm glad you brought that up because that's where my head was going to start at with Tuesday's action. You know, we saw some of that sell-off Monday, Tuesday come back in. We pretty much got it all back. I think that speaks volumes to just some of that low-volume holiday malaise type of trade where we can just get volatility one way or another, but it's just kind of that quiet type of trade action, Bill.
It really is. I mean, I think the general trend in corn anyway is down. Beans is more sideways, just, bumping the lower end and then bumping the upper end. If you look at the big macro picture, I'd have to say that the trend for most markets are going to be steady to lower as we deflate. But then you look at the micro pictures of what Japan did today with their fiscal policy, or the weather forecast, which was a big driver in today's market, and those little changes, and the market, just like you say, it just reverses everything it did the previous day, and it chops people up a lot. I mean, you can lose 15, 20 cents in a market that's trading 6.
That's very true, and I think that speaks as well to not getting caught up in the day-to-day moves, especially during this holiday time frame, because this last 2 weeks of the year, we could see some of this volatility, but it's just so thin and quiet and, choppy, just the malaise. That's my favorite word this time of year, Bill. It's just, it's hard not to, but you don't want to get caught up in some of this day-to-day movement, Bill.
Yeah, when you see a potential position that you really expect is going to work, you also look at your year-end financials and you go, well, I don't want to mess that up. I don't want to goof up my tax planning, so I'm just not going to do anything until the first of the year. So we could come in at that beginning of next year. If there's some fundamentals that haven't really been fully evaluated at that point, we could see a pretty volatile day.
Definitely could. You mentioned you think the overall trend in corn is lower, and I know corn and wheat have kind of been working together the last few weeks. Can you talk a little bit more about that? What are you seeing on charts, and what leads you to think that corn is more trending to the downside here as we near the end of the year?
Well, yeah. So, of course, the high was put in October. Then we retested that at the end of the month, up around that 704 area, and then in November we went up into the 675, 677 area, and we failed there. And then this month we went up, and the highs were about 660. So each month it seems like the highs are lower and the lows are lower than the previous month. So we are trending down a little bit. At the same time, in the big picture, you go all the way back to last spring's low to this October high. We're not even quite 50% down to a retracement level. We did come down and fill that gap that we had left on the way up in August when we had some weather issues. And the downside, even though we're trending down, the downside potential of this market are really limited. Jesse, we're down to a 31-day supply in corn, an 18-day supply in soybeans. It's not like we're going to let the bottom of this market fall apart. That's not even going to be a possibility, regardless of what kind of financial policies our central banks have. The downside of these markets can't really get into full play until we know that the supply situation is getting more comfortable. And right now it's uncomfortably tight.
Do you think, I mentioned the thought that corn and wheat have kind of been working together. Do you think they continue to work together, or is wheat maybe going to diverge itself from corn? Because it looks like wheat's maybe found some support here recently, Bill.
Well, that's because of what you just said. The price of corn and wheat have been going down, wheat leading the way, of course. And the wheat has gotten so cheap that just within the last 2 weeks, we've seen a couple of cattle feeders in Kansas actually buy food grade wheat to feed the cattle. So you're reaching feed value. And so you're going to, as long as the corn market's not falling apart, wheat's not going to fall apart anymore at these levels. Wheat did, though, get to these levels because it had to be competitive with what Russia was doing. And Russia was doing the blue light special because they need money. Mm-hmm. So, even though they're stealing a lot of grain and it's free to them, they're still selling it at a very cheap price.
How about this soybean market? Looking at us kind of bouncing off some of these support levels above and below in beans, meal, and oil, and had their days and really finding support Tuesday underneath the soybean market. But as you look at the soy complex as a whole, you look at charts, Bill, what stands out to you here? Are we going to be able to kind of hold up near these resistance levels around this 1485, 1490 mark?
Well, the trend in the beans has been up ever since October. It's just the opposite of corn. We've been making higher highs and higher lows. We're pushing up against that $15, which is a critical point. It looks to me, Jesse, like the market will eventually push through that because it keeps coming up closer to that, and the highs have been flat, so that's a both triangular flag. So usually you'll end up going in that same direction. What will fundamentally push it, though, is going to be some concerns about South American production, both in corn and in beans. If the total South American production is anywhere near last year, we don't see a large increase in production like the USDA is currently forecasting, we are not going to see supply resolution towards a more comfortable level. And if it gets down to last year's production levels or less, you're really forcing buyers then to shift their purchases to the U.S., in which case they're going to be competing with our domestic users going after a very limited supply, and the markets would really take off. So it could be very explosive if we see that South American crop not come through in good shape. And today's forecast really was for 0.35 to 1.5 inches in the next 7 days in central and northern Argentina, but southern Argentina just to remain dry. And the fact is, 1.5 inches isn't a drought breaker. Whereas yesterday they were calling for more rain. That little bit of a change in the forecast caused a 20-cent opening on the beans. That's how close in tightness we are to supply.
Well, now on your thought too, I've heard some folks mention with South American weather, if Brazil ends up growing a massive record crop, corn and beans, and Argentina has problems, some people have said, well, Brazil will offset Argentina and all will equal out. What are your thoughts to that argument that I've heard from a few folks, Bill?
Okay, well, I actually looked up those numbers today. So right now, if you look at where some analysts are calling for the crop size in Argentina to be as low as 47 million metric tons in corn versus the 55 million metric ton that the government, that the USDA is projecting. I mean, that's a huge revision if USDA is missing it by that much. But using those numbers of 47 plus the Brazilian crop, they're coming up with 172 million metric tons. Last year it was 167.6. We can't go below that. If we go below that, you're talking a major supply problem. So those are the numbers that you really got to keep in mind. Basically 170 million metric tons combined production in South America. That's what we need.
Definitely. Bill Biedermann, agmarket.net, is our guest here today. Bill, let's talk a little more broader scale as we wrap up the year and head into 2023. What is on your mind, marketing strategy, risk management wise? What do producers need to think about here as we wrap up the year and look ahead to 2023? And I know this can encompass old crop sales, new crop sales as well, if they're looking at that. What are some thoughts on your mind that folks need to really think about here as we get ready to start a new year?
Yeah, I think that they need to up the concern levels that we all have. I mean, for the last 2 years, we basically planted and we profited, right? I mean, it was pretty hard to lose money in the last 2 years. But this year going into 23 is a little different because we do have increasing input costs. But against that, we have a deflationary fiscal policy, and that's usually what steers the vessel is fiscal policy. So if that policy is successful and causes commodity prices to move lower, then we're going to be faced with farming at a higher input price with a lower trend. And that's been very difficult. Now, you can go back into history and you look up the 1973 period, followed by 1974 when we had an early frost and we had a bad crop. We had inflation going into those years. We had Russia was the big new buyer. And then we had a fiscal policy change towards, we've got inflation. We had the same thing kind of in 88, 89 when we had a supply disruption of the 88 drought, followed by a negative economic tone. And now we're in the same thing. Instead of Russia being the big buyer, in the last 2 years, we saw China as the new big buyer. We had the inflation. Now we're having the fiscal policy. Well, all of that to say, in 1975 and in 1989, following the bullish setup, it was disastrous for producers. So my advice is to look at history. Don't make the same mistake twice, or don't make the same mistake that maybe your dad or grandpa did, and get yourself hedged off. Sell, take the inputs divided by your production and sell those number of bushels at these amazing values. And, we're looking at it with an option. We can lock in a floor under half the crop. All of the inputs are pretty well covered. And the other half the crop's totally open. But the crop that we used an option on, that's totally open if the market goes up, at least for about $1, and then we have a ceiling price. But if it goes down, we're protected, unlimited protection. So it's just a really, comfortable way to go through a year where we could see a transition from plant and profit to plant and maybe worry if you don't have it protected.
Well, and this, you may have answered my question already, but I'll reframe this up as well. You mentioned looking back at history, and I was going to say, rather than what did we learn in 2022 when it comes to marketing, what should we have learned when looking back at everything that happened here this past year? And I think you kind of mentioned some of the things there, but I'll let you answer that if you have a different thought. What should farmers have taken away from this year and just the volatility and everything that's been there, Bill?
I think one of the key things that I have consistently heard you say, as well as some of your colleagues in the industry as good, responsible ag media people, what is you've emphasized that word flexibility in your marketing plan. And I believe that is in these volatile markets. I mean, let's just say you sold these beans at $15. You're getting a return on investment that you probably have never had in your whole life. But if they go to 18 or 19 or 20 or 30 or $40, who knows, right? Mm-hmm. You would be sick if you missed out on that. So, I mean, to spend the 20 or 40 cents that it takes when you're selling $15 beans to put on some kind of a position that'll protect you in case things go crazy, I mean, it's just kind of a no-brainer. And that flexibility is what we have really learned in the last couple of years. And the producers that have done that have been very comfortable and they understand it. And they're going to do that and maybe already have done it for maybe half their crop already in 23. Whereas the people that didn't listen to that or were afraid to step into that arena and go, well, I don't want to spend 20 cents on an option. Those people, they don't get it yet. And unfortunately, if they aren't managing their risk in 23 in a lucky way, they could be like I was in 1989. Every week I'd come into the market going, okay, well, we should have a 10-cent rally this week and I'll be able to get some stuff sold. And every single week in 89, that market just seemed to go down about 4 or 5 cents. And it was just wearing from January all the way to harvest.
Well, and with that too, not just grains, but livestock producers, whether we're talking cattle or hogs, especially cattle. I know you mentioned the guy in Kansas, feeding wheat, and some of those feed margins coming more in line. And I know a lot of folks are bulled up with this cattle market, Bill, but getting some protections in place there, but leaving your top side open, just managing that risk. It's so important, whether you're a grain producer or a livestock producer, Bill.
That's right. You can buy a floor of like $150, $152 floor, and you don't have to worry about this thing if the economy really collapses. Or, what's the biggest risk out there? A, that fiscal policy works, right, and our economy slows down. But B, something like that was not expected, like China was managing their economy with COVID restrictions, but they didn't expect all that social unrest. So now they opened up the door, and what's going to happen if there's just massive COVID problems? I mean, whether it's death or whether it's just voluntarily shutting down the economy, we don't know. But that contagion of health risk could be a very large contagion economic risk to our marketplace where we buy and sell with them. Supply chains, if they don't get back to normal, well, that would definitely cause a problem. If that happened, we wouldn't get our supply chains back to normal. So everything could be affected by that. And that, of course, is unexpected. That could, something like that could make the fiscal policy that our government is doing be magnified 10 times over. And so the negative deflationary impact could be even bigger. We just don't know. So why take that risk when for, $1 you could lock in a $1.52 floor? That kind of thing. I just think that this is a common sense kind of a market. You don't want to overthink it. You want to be in the market in a flexible way.
Single biggest item you're maybe watching, concerned about as we start a new calendar year, and maybe it's, you've mentioned a bunch of these. Is it inflation, deflation? Is it China, demand concerns? Is it South America, weather and production? Is it D, all of the above? Is it logistics? I mean, is there anything you could point to that is standing out more so than another thing that you're really keeping a close eye on as we flip the calendar to 23?
Well, I think the question will be what is going to be the surprise? Is the surprise social unrest? So now we have to change policy. I think the policies that the Western and developed nations have embraced is fiscal restraint and deflationary type, let's get inflation under control policies. And that's going to steer the vessel. I mean, that sets the vessel in the direction they want it. The only thing that'll derail that is a tsunami or a massive unexpected storm that's going to push the vessel in a different direction. That storm could be what's happening in China. So be on the watch for that. The other thing that we can't control that can be a major surprise is weather. And if this weather doesn't allow us to see two good production cycles, i.e. South America and then North America's production cycle, replenish the supply chain of grains and oilseeds, that could derail a deflationary outlook too. So those are the two big things I'm watching right now going into the first quarter, but I definitely think a person should sit down, look at their input costs, figure out what their potential yield would be against that, what their break even is on those bushels, and get some of that locked off and spread off.
Well, Bill, great thoughts as always. Before we let you go, I know if producers have questions, they want to work with you and the agmarket.net team, I know they can reach out to you very easily. They're online, giving you a phone call. And of course, you guys have a great conference coming up in Nashville in February that I know I'm looking forward to attending as well. So you talk about that a little bit, Bill.
Yeah, we're really looking forward to that. We're going to have some phenomenal people to learn from. David Hightower is probably the most renowned ag economist. He's traveled in almost every country there is in the world and consulted with them. So we're going to have the president of JSA, who's an ex-cash ADM trader, our own staff, Matt Bennett, Brian Split, Jim McCormick, just a huge lineup. Drew Lerner, I've known him for 43 years in the industry, one of the best weather meteorologists there are. There's quite a few, but he is at the top, in my opinion. He's going to be speaking. We're really looking forward to a great conference. We're almost sold out. Our cheap room rate is just, we only got a couple of beds left, and then it's going to go to the normal rate. So if you want to go take a look at it, it's on our website at agmarket.net.
And of course, you can find their contact info there as well, agmarket.net. A lot of great tools to help producers with that. Bill Biedermann, appreciate the time, sir. Merry Christmas, Happy New Year once again, and we will talk to you in 23. Appreciate it.
Great. Thanks, Jesse.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.